Hi, this is Caleb Owens with the Insurance Experience with Todd McGrath. Hi, Todd. How's it going?
Doing fine. Good morning. How are you doing today?
I'm doing really well. Can't complain on side of the heat and everything like that, but it's not a it's not as bad, I guess, as some other people in the country. They got it really bad, but yeah, I guess doing pretty good.
It's a scorcher down here in Florida. I think we are close to 100 degrees yesterday, and it's already
Wow.
warming up this morning. Nice and
Yeah.
steamy.
Yeah, because you guys have what, 80% humidity as well, correct?
Probably more like 90. Yeah, but this is the time of year when that happens.
Yeah.
And then you get like November, December, January, and that's why people move to Florida because it's warm and low
Yeah.
humidity.
Yeah, they moved there during those months thinking like, oh, it's so much nicer there. And then they get to the summer months, you're like, I got to get
Get
out
up
of
north.
here. Yeah.
Yep.
Yeah, Todd, thank you so much for joining me. And I want to know more about you and your history and where you came from. So if you can start that off.
Sure. So I grew up in a small town in Southern California called Big Bear Lake. And after
Yeah.
graduating high school, I went to college in Orange County. And then out of college, started my career at State Farm Insurance as a claim representative. My area was the San Fernando Valley down to Malibu, Santa Monica, and did that for a few years and then promoted into first line leadership. And then in about 1994, changed my life with the Northridge earthquake. And I did a lot of catastrophe as a claim representative at State Farm, hailstorms and brush fires and floods and whatnot. But after the Northridge earthquake, I was promoted to what they called the regional catastrophe coordinator for Southern California. And that was a huge catastrophe. It was one of maybe after Hurricane Andrew, one of the first $1 billion storms for the industry. And so I did that for a couple of years. And then, as California is, everybody started suing each other after the earthquakes. And so I joined a litigation unit where I managed first party bad faith litigation for a couple of years, and then was promoted to a second line leader in 2000 and moved from Southern California to Florida. And did that for a few years and then became a claim consultant at State Farm's headquarters in Bloomington, Illinois. And then in 2008, my last promotion was to claim manager down in the Tampa area, handled things like SIU, which is the industry's fraud fighting effort, and then started a new operation called Field Assignment, because at the time, State Farm was consolidating most of their claims operations into three major hubs, and they were in Dallas, Phoenix, and Atlanta. And so I created a unit, almost maybe 400 or 500 people, to every state in the United States. And it was our team's job to do any field intervention, whether it be pick up police reports or attend mediations or do scene investigations and things like that. And then in 2018, I got caught up in, probably one of State Farm's fifth or sixth or seventh or eighth reorganization and severed from the company in April of 2018. A very amicable separation, great severance package. But I found myself, I was too young to retire and I wanted to do something. I ran into a company in Jacksonville, Florida called Stillwater Insurance Company and became their vice president of claims, and then been a Stillwater for almost 5 years, heading up their entire claim division.
Wow. Wow. You covered a lot of territory there really quick. That's really interesting though, because a lot of people want to know, wow, how do I get to be to that level? VP of claims, you're way up there on the top of the company. But from understanding that very quick background is that you worked your way up from the bottom. You did your time in the ranks and you came all the way up. I'm sure you covered a lot of grounds there, but I'm sure that you did a really good job as well. They didn't just promote everybody. They were promoting you because you probably did a really good job for them. When they're like, wow, this guy Todd, he's great. We need to move him on up. He's done an excellent job. Like you're saying after the San Fernando, the earthquake there.
Yeah.
You probably did an amazing job. I'm sure that they didn't just move everybody up. You probably did exceptional during that time period. And that's why you got bumped up and moved up all along the way. So it's not just a matter of putting in the years, but you did exceptional work. I'm assuming this. I don't know for sure, but I'm assuming that you did exceptional work as well. That's why you moved up to where you're at.
I tried, and you're probably right to some degree that State Farm has a lot of people. I think at their peak they had 35 or 36,000 claims employee, and I learned early on that you all look the same unless you do something exceptional. And
Right.
in my arena, claims, it's fairly easy to, I shouldn't say easy, but it's clear how to do that, and it's treat people right. It's understand that you're in the business of customer service and helping the customer. It's not like claims people are making widgets or selling anything. They're just simply fulfilling a promise that an agent or broker made at some point in time, that in the event of a claim or a catastrophe, we'll be there to help you. And I try to do
Right.
that as well as I could. I think relationship building is huge. And I built some very strong relationships that turned into mentors and coaches and helped me along the way. It's hard to do things just on your own. You do need some assistance. And as I built my career and moved into the upper levels of leadership, I tried to model that behavior with either younger or newer folks to identify those that really got it and really understood the business, and tried to help them and mentor them and bring them along the way. Because, again, it's hard to move up on your own. You really do need assistance from those who not only mentor you, but be honest with you. And I had a bunch of those along the way that weren't afraid to say, Todd, you're rubbing people wrong in this area, or here's your real strengths. And that's great. Vice President at State Farm once told me that you have some really good strengths. It's like you got the right hand layup down great, but there's a couple of things that you could probably work on, like your left-handed layup, and practice that and focus on that. And he was able to point out a couple of areas that I really needed to improve upon. And that was great advice. And I took that advice to heart, and it's just continued to serve me along the way.
That's really good, though. See, it's a two-way street, though, because he gave you good advice, but then you really took it to heart. You didn't take criticism from it. You're actually like, okay, you're absolutely right. I need to improve this. And you actually worked on that. And so you improved. So that's good. And you're also saying a lot of good things about State Farm.
Yeah.
I never get to hear these sides of things. So that's really interesting to hear. That sounds like they really try to take care of their people and do a really good job. And they mentor people. That's something I have not heard either. So that's really good to hear as well.
Yeah, I've been gone from State Farm for several years. I'm not so sure where they're at today in that arena. I know that they've gone through some tremendous changes and a whole host of reorganizations. And I'm not sure if they've completely found their identity right now or not. But I've been gone for so long, I'm just not 100% sure where they're at in that arena.
Wow. Okay. So that's really interesting, though, to hear about. I'm still trying to package all that together in my mind, just where you came from and how you worked your way all the way up to where you're at. But so tell me more about VP of Claims. I know about claims, but probably a lot of my viewers don't know about what a VP of Claims does. So can you give us a brief background of that?
So it's Stillwater Insurance. It's a unique business model. So State Farm is one of the behemoths. They've got, I don't know, $100 billion in the bank or whatever. And there's others that are chirping at their heels. The Geicos, the Progressives, the Allstates, the Farmers, those big ones. Stillwater is more of a medium-sized company, about 350 to 400 million in annual revenue. They have about 350 or 360,000 homeowner policies in 48 states throughout the United States. And our business model at Stillwater is more of a relatively small claim environment, or claims staff, about 150 people. And the business model is such that when a homeowner claim comes in, it's assigned to a Stillwater examiner, and they're the owner of the claim. And they do first notice of loss and try to phone scope the loss the best they can. But many of the claims do need some type of field intervention. And so Stillwater utilizes various business partners, either independent adjusters or third-party administrators, to go out and actually look at the damage. We actually use some drone technology to look at the damage, write an estimate. Those documents come back to the examiner, who evaluates it and makes adjustments. It goes through a quality assurance review, and then payment, or whatever the final adjudication is that the examiner does with the homeowner. And most of my career has been on the homeowner or property side of the business. I've done a little bit of auto, but the homeowner side of business, there's a variety of types of claims. The most common one is what we call non-weather water. And what that means is some type of plumbing fixture inside the home, whether it be the washing machine hose or a water supply line to an appliance, bursts and floods the home. And most of that's covered under the homeowner policy. But then there's a whole host of other types of claims called weather-related claims. And those are the ones that usually get the press and the notoriety. It's whether it follows a big hurricane or a brush fire or massive floods, or like clockwork, in about April and May of every year, we get these hailstorms going through the Midwest, and hundreds of claims, or in State Farm's case, tens of thousands of claims come in. And that's a different model, because the local claim office or the local claim unit can't handle hundreds or thousands of claims coming in a week. Wow. And so most carriers rely on what we call third-party administrators, or companies that can handle 1,000 claims at a time or 5,000 claims at a time. They have the workforce and the staff to flood that area, whether it be Oklahoma or Texas or wherever, and handle a lot of claims in a short period of time. They bring in adjusters from all over the area, and that's what those adjusters do for a living. We call them storm chasers, but on a good way, that's a good thing, because they go into those areas and handle a lot of claims in a short period of time, and allows the insurance companies to keep their normal staff doing those everyday claims, the plumbing failures and the kitchen fires and things like that. Yeah, a whole variety of claims that we handle. And that's what appealed to me early on in my career, is it's every day is a little bit different. You're dealing with people, you're dealing with different types of losses. I enjoy talking with people and all different walks of life and all different situations. The common theme is something bad happened before the adjuster comes. Their house is flooded or their house burned or whatever. And that's one of the things that when I talk to younger adjusters, that you need to understand that this business is about people, and you have to have a level of empathy to feel for people, because when you're going out there, they're not bringing you out there, hey, come in and have a cup of tea and let me show you my remodel kitchen.
Right.
No, they're showing you something that's a disaster. You're there to help.
Right.
So that empathy is a huge piece with claim professionals.
You're absolutely right. We've dealt with claims, I'm sure you have as well, where they've lost a loved one, like in a fire on the property. And so you're absolutely right. It's not, I'm sure, like on the smaller ones where there's hail damage on the roof. It's like, all right, come fix my roof. It's not a earth-shattering thing for these people, but it's for the families. It can be whenever you're talking about like a large loss,
Right.
fire, different hurricanes, things like that. This can be absolutely devastating. And a lot of people don't think clearly whenever they've gone through something like that. Right. So you're absolutely right. Like having empathy and actually trying to take care of them the best way you can. That's what really insurance is all about, if I understand it correctly, is taking care of people in their time of need. If you didn't need our service, you wouldn't have used it for all these years. But it's that time of need that whenever they've really or down because of fire or whatever they've got going on, that's when you really need an insurance company that can come and take care of you. Yeah, that's really interesting to hear about from the insurance side, because I don't often get to hear from that side of the house. But that's your job ultimately, is to take care of people. We provide the temporary housing. Right. As our company. And so we try to take the same approach. We try to go above and beyond and really try to get them taken care of. Whereas I'm not saying our competitors don't, but we really try to emphasize that and really try to take care of them. Whereas, because we know that they're in a situation that is really bad for them. And a lot of times, if you've lost your house in a fire, you don't have the financial means to go get another property a lot of times, because you just lost your entire house. Right. Everything was in that house. We'll pay for like their deposits and do all these different things to get them into a property. Whereas not everyone can do that. Not everyone has $5,000 or $3,000 to put down on a second property to get them into it. So that's, I second your approach on all that. That's really, it's good to hear.
Yeah, the worst claims are ones where people have suffered a loss of life, or a pet just breaks your heart. And some fires, fortunately, knock on wood, everybody got out safe. And then you're talking to them about these cherished items that they lost. And as an insurance adjuster, you take, for example, a photo. So we'll pay you for the photo, but the photo might be $3 but it's a photo of their grandma who they lost 20 years ago.
And you can't replace that, can you? It's not the $3 that they care about.
And some of those, or heaven forbid, a pet, unfortunately, in the insurance world, is considered property damage, and you just pay for the property value, however much a pet, it might be $500 or whatever. Most people have had pets before, and if you've ever suffered the loss of a pet, it's just gut wrenching. They become a member of your family. And so the good adjusters, the good insurance professionals understand that, and that you don't say on day one, I'm only going to pay you $3 for that photo, or I'm only going to pay you $200 for Fluffy. That's not the time to do it. The time is to grieve with them and understand their loss, and really share that you're there to help, whether it be with temporary housing, whether it be with an advance so they can go out and buy some clothes, or they go out and buy some school supplies for their kids. Understanding really what's important on day one and day two and day three, and then shifting to day 60 or day 90. That's when you start talking about, here's the amount of money that we can pay you, and here's why. Right. And that early on, that's where it comes back to that empathy part, and really understanding people and putting yourself in their shoes to say, my goodness gracious, what would I do if this happened to me?
Yeah.
And I've experienced a couple of claims over the years. My mom, who lives in Southern California, I've been assisting her with her claim because since December, they're fine now, but they just got inundated with storms, 50 feet of snow up in the mountains and just unbelievable amounts of rain and water. And her roof was damaged. She had some interior water damage, and it gave me an opportunity. I assisted her on her claim because she didn't want to deal with it. And it gave me an opportunity to be on the other side of it and talk to the adjuster on the other side. And some of it was good, maybe some of it wasn't so good. It was an eye-opening experience that, wow, that's why you shouldn't be doing what you're doing. You should have empathy. Time to talk about what you're not going to pay for. It's the time to talk about what we can do for you. And then later on, you need to make adjustments. You can do that.
Yeah. So that's Big Bear, I take it. Big
Close.
Bear area?
Close. She lives, after I graduated from high school, my mom and dad moved. They live in a neighboring mountain community. It's a little bit lower elevation. So they don't get as much snow, but still.
And they still had a major storm, though, that did damage.
Yeah.
Wow. That's so that's really interesting. You got to see both sides of it, because there's a lot of people, I'm assuming that probably a mass majority, that never experience a large loss for majority of their life, if ever. So they don't, whenever they do go through a large loss, you're an experienced professional. You know what you're doing. And also you could handle that objectively in that situation because you weren't directly involved. It's not your house, but yeah, it's totally different experience whenever it's your house, your primary house, and you have nothing else to turn to. So people, for understandable reasons, get emotional about that. And it's kind of like you're saying as well, but it's not the time to discuss how much you're going to pay them for each line item during the first 72 hours. That's not the time to let them grieve, let them get through that experience. And then later, whenever they're calmer and you've got them taken care of, then you can start going through it all and say, okay, listen, this is what we'll provide to you for your loss. Wow.
I got some buddies on the auto side of the business, and they have their own challenges that, of course, they see loss of life or injuries a lot more than we do. Auto accidents are so prevalent. But on their side of the business, someone who has a 1966 Mustang that they fixed up and have had in the garage, and their grandpa gave it to their dad gave it to you, and then for some reason it's destroyed or damaged. You don't go into talking about how much you're going to depreciate a 70-year-old car. That's cool. Tell me about the car. Because cars are people really get emotional about their cars. They love cars. And quite frankly, they need a car tomorrow to get to work. And so the same thing on the auto side, that empathy factor, really do a lot of listening and understanding, wow, I get how that car was passed down. Instead of saying that car's really only worth about $3,500.
Right. You don't want to do that.
It's priceless. Yeah.
So in that sense, being in the insurance industry, you're trying to attach a price tag to a priceless item. And so that's a paradox, right? You're trying to do that in a very careful manner. You don't want to just go straight at it and just say, listen, I know you love that car and it was amazing to you, but unfortunately it is a 50-year-old car, and due to depreciation, it's only worth X. Right. Instead of what you valued at it in your mind as being priceless. It's got a price, and unfortunately it's not a very high price because of the different circumstances. But so that kind of paradox. See, that's the things that I like to hear about, because I don't get to hear about these things as often. So that's really interesting to hear about. So with your role as VP of Claims, I understand all the different aspects of that. So would you oversee all that? You would oversee all these different people that worked underneath you. And you were also talking a little bit about the differences, because a lot of people, including myself, we only hear about, like you said, like the major storms, like a tornado ripped through Indiana, I think, destroyed these apartment buildings, these major events. We're all like glued to a TV about that. Wow. Yeah. 300 people lost their homes right there in that one tornado. But outside of that, there is these events that happen on a regular basis. Every single day, there is somebody that has a fire, be it a kitchen fire or different circumstances like that. Like you're saying, all the internal things, and then pipes burst, things come undone, flood the whole, floor of the house throughout the entire house, which means they've got to move out. That's a large loss because they've got to go in and replace all that. So we don't hear about those things. And that's really interesting to think about. And you guys also, so your regular company adjusters that work directly for the company, they take care of all those claims. And that makes sense from a business standpoint. You can't employ thousands of people because one event that might happen every once a year
Right.
or may not even happen, keep those people on staff for that one event. So that's where a TPA company comes in, or independent adjusters. Those companies like that come in to surge for you guys. They go after all the storms. That's really interesting. It makes a lot of sense to employ people like that for those type of events.
Yeah, as a vice president, I don't get involved in as many individual claims. Like I focus a lot on people and staffing and budgets and
Yeah.
expenses. And over the last year or so, really focused in on a lot of business relationships of what you're talking about. And
Okay.
especially with technology, you're silly if you bury your head in the sand. And there are ways to handle claims without field intervention. And the field intervention costs money. You pay an IA firm a standard fee, and then you pay them a fee schedule based on the amount of the estimate. Where there's some technology. I don't know if you've heard of a company called Exactware. They're probably the largest supplier of estimate software to the insurance industry. And most of the contractors use it as well. But they have a product called Claim Experience, where first it works great for some customers. Like, for example, I mentioned my mom. It wouldn't work great for my mom. My mom's 87 or 88 years old. And really the concept is you send them a link on their iPhone or whatever phone they have. They click on the link. And then while you're on the phone with them, you can instruct them to walk through the house, and they videotape. And then you say, oh, stop right there. Get a little closer to the corner. Let me see that. And then the software allows to provide measurements. And if you can't determine, let's say it's a kitchen fire and the range hood is damaged, you want to focus in on, okay, what kind is it? Is it 4 burners? Is it 5 burners? What's the hood like? And then you can take all that information and write an estimate inside and hopefully get close to the amount. You can pay the amount of the loss. And then once they get a contractor, if there's differences, you reconcile.
Wow.
Yeah. So
it's interesting.
There's other technology. I mentioned drone technology. We found this really cool company. I'm not going to say their name. I'm not promoting companies here, but
sure.
There's a bunch of companies that use drone, but there's one particular company, they fly a drone over the house, and it's great for exterior damage, like hail damage or wind damage. And they can zoom into, you can almost feel like you're touching the shingle. They can zoom in that far to see the amount of damage. Take that aerial footage. They have an inside adjusting arm of their company where they actually write it from that drone technology, send it over to us. We run it through our QA process, and you can settle the claim without ever having sent an adjuster out there. On the expense side, which every executive looks at because that's just part of the business. To your point about staffing, you can't staff for cat. If you have 1,000 people waiting on a cat to happen and 3/4 of the year twiddling their thumbs, you're all right. Same thing with the technology nowadays. It can save you expense dollars, which is very important in the claims or insurance business.
Wow. See, you touched on some really interesting stuff there. That's really cool to think of. Cool and scary. I'm sure that there's a lot of field adjusters that are like, oh, this is not good, but it is what it is. It's like you're saying from the company standpoint, if you're looking at it from the expense side, you're like, okay, great. So I pay this company X, and that may be a fraction of what I pay a field adjuster company to go out there and do the same thing. And it most likely is. It's going to be significantly cheaper, especially with this technology, like you're saying, like inside the house where they can go and just use their phone and scan it. And wow, that's amazing that you can actually type up a claim, get everything in there, give the estimates, pay them off that, based off that. And then a lot of the auto industry has been doing that now for a while, correct?
Oh, yeah. The auto, I think that's where it was born. And I had an accident maybe 10 years ago, and it was the other person's fault. I forget who the carrier was. But when they contacted me, they said, do you have a phone? I said, yeah. And they said, take a picture of the VIN, take a picture of the 4 corners, zoom in on the dent. And then, do you have a company do you know where to fix? I said, no. They said, we use this. We have a relationship with the shop right down the street from you. Take it over there. They'll fix it. They'll have a rental car for you. 3 days later, they call me. I pick up the car, and it was all done. It's just very easy. Wow. I maybe had 1 or 2 conversations with the adjuster, and all the rest was just done behind the scenes. I would like to think that there's always going to be a need for field adjusters because they play a very critical role in the process. And there are some customers, I use my mom, for example, who would never embrace the technology. I talked to her every other week just to help her with her online banking. It's like, I forgot my password again. So that kind of customer doesn't fit the technology. So you do need someone to go out. and hold their hand and walk them through the process and assure them that we are going to pay for your roof, and be careful of these types of scammers or whatever. And
Yeah.
I'm jumping around a little bit, but the whole direct repair industry is another piece where direct repair is where, like, we have a relationship with a direct repair program over at Crawford and Company. It's called Contractor Connection, and it's fantastic. And so if the claim meets certain criteria, we use some AI to make sure it's not a new policy or there's fraud involved or whatever, no big coverage issues. You offer, do you have a contractor? If they say, no, I have no idea, we can assign that to Contractor Connection, who they vet all the contractors, they're bonded, they're insured, they got work comp. And that contractor actually goes out to the house, writes an estimate, uploads the estimate. We okay the estimate. The contractor repairs the house and sends us a bill at the end. Really slick, and eliminates supplements and a whole bunch of other things. So I think the direct repair program, the drone technology, just InsurTech in general, is changing the whole claim industry as a whole.
Yeah. Wow. See, that's really interesting to hear about. It's a dual-sided thing. And it's kind of, so many of these occupations are on the way out regardless. I don't care what happens. They're going to be going out just because efficiencies. And
Right.
you can't really fault a company for using technology like this, because it's better all the way around. It's not only better for your company because it's much cheaper when you're reducing your overhead, but it's better for the consumer as well.
Yep.
If you got in an auto accident, do you want to talk to somebody? Do you want to have somebody come out to your house and meet you in, I don't know, 2 weeks, whenever they can get out there, and then eventually get a check after that? Or do you want to pull out your phone and be like, all right, yeah, let's scan it? It's so much better for you as well to just use that type of technology. And to your point as well, to these, I'm going to say that carefully, to people that are older, and let's say technology decline, that they're not necessarily adapt, because it's
Right.
not necessarily always people that are in their 70s or 80s. I've seen some people in their 50s and even 40s sometimes that are like, oh no, I don't know how to do that. And you're like, really? We have a lot of difficulties now dealing with them, because so many things have moved on to where, for instance, we deal with leases a lot.
Right.
And we have an elderly gentleman that's, I want to sign that in paper. And you know what? So many years ago, 5 years ago, that was doable. You could be like, yeah, okay, yeah, let's get a piece of paper. We'll print everything out. Now it's no, you can't do that. It's become like that to where you not only, it's not even an option anymore. You can't even do that. So yeah, we had to go way out of the way to accommodate because of that. And I imagine the same thing in the insurance industry with, like, what you're talking about with your mom, is in right now, you can still assign a field adjuster. But in the future, maybe even only 3 to 5 years down the road, you could be like, we don't have any. There is no field adjusters to go out there. And if you don't have a phone, if you don't have anything like that, sorry, you have a son that does.
Yeah.
Can he come out and help you out? Because there is no other option. It's going to be, you either have this technology or you don't. And then those people that don't get left behind. I see that happening already, because this technology is great, but it becomes a necessity. You either have it or you don't have it. And if you don't have it, so you're not getting that claim done. You're going to have a major problem for those people. But yeah, that's definitely a situation that I've seen. I didn't even expect it to be so bad myself, with, because he wanted the paper lease. And you're like, okay, yeah, we'll get that. No, you cannot. It's just, they almost don't exist anymore. So that's crazy. But yeah, that's definitely what we're seeing.
I think that insurance is always going to have some type of field option. And maybe that's the direct repair program. So the customer says, I don't have a phone, or I'm not going to do that, or I don't have time to do it, I'm traveling, or it's a rental home in a different state that I'm not in, and the tenant doesn't want to participate in that. Maybe that's where the direct repair program is.
I see.
How about we send out a contractor actually do the repairs? They'll send us a bill and we'll pay it. Oh, I like that option. And your paper example with the temporary housing, I think COVID had something to do with that, when everybody was sent home. And I wish I would have invested in companies like DocuSign, because that's the answer nowadays. I'm gonna email it to you, you sign it, you email it back, or scan it and send it back. I think that you're always going to need some of those options. But to your point, not the white glove treatment on every single claim that you maybe would have expected in the past. We still have to fulfill an obligation, because they are paying a premium, they're paying money for the product, and we promised that we'd be there in their time of need. But being there has changed over the years, and it could mean something different today than it did 10 or 15 or 20 years ago.
Even 5 years ago. No,
5 years.
yeah, I definitely agree with that. Is that yeah, you definitely have an obligation to fulfill, but that might look differently because just where we're at right now, and then just even look 5 years into the future, that could definitely change things a lot. So
Sure.
we're definitely trying to incorporate as much technology in our company as well. We're trying to automate a lot of things, and to the benefit of the consumer as well. To the end consumer, we want to make things more streamlined, much quicker for them to where they can just talk text and everything happens so much faster in the background that they don't even have to really do much. It's like your experience with your car where you said you had this damaged car and then you just went out around this outside of it, scan it, and then they lined everything up. That's exactly what we're trying to incorporate, something to that effect with the temporary housing. It's for the most part, you're going to encompass probably 60 to 80%, maybe even higher, depending on the market that you're serving, where you can catch a mass majority of these people and help them out. There's
Right.
going to be outliers like what you're pointing out, like your mom and different people like that are, unfortunately, they're just not going to be picked up by this. And service for them is probably not going to be what it was in the past, but you still have to take care of those people.
Yeah, very much, very much. Yeah, the technology, you really need to embrace it. I think about the temporary housing space and the challenges that are there, that if someone's house burns down and it's a 4 bedroom, 3 bath house in this particular
Right.
zip code, we do need to find them something similar to that. But, and then if they have pets or if they have, you need to find a home that's will allow dogs or cats or whatever. We had one recently where it was out in California where they boarded horses and they had 6 horses. And it was a challenge for the temporary housing folks to find somewhere that they still need to board those horses. And
Yep.
you could challenge it and say, we'll find a house close to you. You can drive over and board them, but you need to entertain what they had and what they need moving forward to put them in that similar condition that they were in before the fire, because it's going to take 6 to 9 months to rebuild it.
Yep.
A place that they're comfortable with, that's close to their kids' schools and the Little League park and the soccer fields, that you can't put them 30 miles away in a 2 bedroom, 2 bath condo. That's just not reasonable. I feel for your end of the business. And we do rely on business partners like yourselves. I don't know that we use your company. I'm not even sure who we use, but we do rely on vendors to supply that piece for the customer. Because back when I was an adjuster, it's okay, let me help you go through the classified ads and we'll see if there's a home for rental in the area.
Right.
It's just so time consuming, and it's
Right.
it's just a pain where now you just turn that over to a vendor and they take care of that service for you. It's nice.
No, you're absolutely right. We've dealt with situations exactly what you're describing, where people are more in a rural environment and they had horses, it was a ranch, they had all of it. And this older gentleman, he just flat out refused. He just said, no, I'm not leaving the ranch here. I'm not going anywhere. And so he just flat out refused. They had to accommodate. So what we did is we brought out a mobile home.
Yep.
He stayed right there. We brought a mobile home out. He stayed there for, I think it was like 16, 18 months in the mobile home. And so it worked out. He liked that so much better. In which we're around it, he was happier, and it worked out to everyone's benefit. So you can't always accommodate. It's kind of like you're saying. Another big problem that we're experiencing now, and I'm sure that this is prevalent throughout all the different facets of the industry, is the cost. You're seeing this with the cost of repairing and everything like that. So originally, their value of their home and all the different replacement costs was X, right? And now all of a sudden, with inflation, with all these different things going on, it's gone up substantially. You can be even looking at 20, 30% higher costs to replace these different things. And their coverage doesn't cover for that. Didn't have the adequate coverage. And how can you, when they bought the house 15 years ago, things are worth this much money. And so now you're in a totally different experience. And so we see that a lot with the temporary housing side, whereas 5 or 10 years ago, $30,000 or even $60,000, depending on the market, was enough money to keep them in a house for 14, 16 months, maybe even longer. And some places you're talking like, okay, that's been reduced to 6 months. 6 months, and that's it. And so it's bad all the way around. The family's in a situation where after 6 months, and it's going to take at least a year to repair their house, what are you going to do in those situations? So we do the best we can. And I'm sure that you guys are seeing the same thing, is that you're doing the best you can to try to take care of people given your circumstances.
It has blown me away over the last maybe 24 months or so. I've seen some temporary housing bills, especially in California. There are a lot of policies in California that 16, 18, $20,000 a month. That used
per
to be
month.
heard of. And so
Yeah.
you need to be creative. The temporary housing industry needs to be creative. Like your mobile home example is a perfect example. Some of the other challenges that we're seeing in the marketplace, I don't know if you saw recently, but Allstate and State Farm announced that they're not writing any new business in California.
Exactly.
And
Exactly.
California has exploded, and some other areas have too, with just the cost of building materials and the cost of rebuilding. It's incredible how much it has increased, and
Hmm.
the availability of contractors is a challenge. We're probably a little better now, but 18 months ago, 24 months ago, the building supply chain challenges where you couldn't get lumber, you couldn't get drywall, you couldn't get aluminum. And so that extends the period of restoration. So now if you're paying 15 grand a month for a temporary house and it's going to take them 6 weeks to get the materials, you've just eaten into that additional living expense dollar, not because of the housing market. No, it's because of the supply chain. And
Exactly.
we've seen that, and it's creeping over into other states as well. But I hope ultimately it goes to it's going to rest at the consumer's feet, because it's going to
Yep.
increase premiums and the amount paid. And then even on a grander scale, we're seeing it in Florida as well. The cost of reinsurance is, first of
Hmm.
all, it's incredibly expensive, but second of all, it's becoming unavailable. Where many times
Wow.
you'd find 6 or 8 or 10 reinsurers, or, oh yeah, we'll put a layer on top of 20 million or whatever.
Wow.
Now you're finding so few reinsurers who are willing to get into the market, or the cost of reinsurance is just so exorbitant that it impacts the premium dollar. And in South Florida, some of those areas, you're paying $10,000, $12,000 a year for a homeowner policy. And maybe in some of the other areas in the Midwest, you're paying 1,500 or 1,800. But those costs will eventually trickle down to the consumer. And so I think it's important. I don't want to get on a soapbox, but it's important for the legislature, it's important for the private insurance
Yeah.
industry to get together and solve this problem, because it's getting a little bit out of control right now. And homeowner insurance is slowly becoming unaffordable.
Yeah, no, you're absolutely right. You touched a very important topic because, especially in Florida, you're seeing it a lot. I think mainly because the rate at which the premiums are going up. It's not necessarily the end dollar amount, it's the rate at which they're increasing.
Right.
So they're going up so much that it becomes unattainable, unaffordable, to a point to where the homeowner has to make a decision. Am I going to continue to live in Florida? I might as well go to Alabama at this point,
Right.
and some other state that's nearby where it's more affordable, because I
Mhm.
can't even afford to live here anymore. You touched upon a subject that, if you don't mind highlighting a little bit more and giving a brief background, because I know about it, but I'm sure that there's probably 90% of people do not know anything about reinsurance. What is reinsurance?
So insurance companies in general, I'm not a rate maker, I'm not a auditor, but actuary, but there's formulas put together of how much you can possibly charge for a premium, still make a profit, but also have enough money to pay claims. And most companies can absorb X amount. Maybe it's 20 million, maybe it's 50 million, maybe it's a billion. I don't know, depending on the company. But over that, for the 100-year storms or the 500-year storms, you put reinsurance on top of it. And so there's some big companies like Reinsurance Re, and there's some other ones in Bermuda and over in Europe that for a premium, they'll say, okay, we're going to put an additional, let's just say, $5 billion on top of what your cap is. We're going to charge you X amount as a premium. But in order for the reinsurance to kick in, you're going to have to pay the first, whatever, 50 million. And once you
Right.
get to 50 million, we're going to come in on top of that, and we'll pay for the losses between 50 million and 100 million, whatever the amount of reinsurance
Wow.
you purchase. And that's really necessary. You think of the state farms, for example, that, I don't know, they might have 40 million policies. I don't know. You look at a Hurricane Andrew, I'm dating myself, Hurricane Andrew or Hurricane Katrina, or large brush fires in the last couple of years in California, you get something like that comes in that just overnight is going to cost you $500 million. You can't
Wow.
sustain that with just your regular premium dollars.
Right.
And so you need to put some reinsurance on top of that. It usually only kicks in larger situations, larger catastrophes. And there's different levels of it. Like you can do, some companies take reinsurance. If the individual claims over $1 million, I want reinsurance to kick in. Others say that, okay, once my conglomerate, my total losses get to 50 million, that's when I want the reinsurance to kick in. So it's a safety net so the insurance companies can assure themselves that we only need to rate for this because over that amount, over that 50 million, we're going to get some help from a reinsurer. So,
Wow. Okay. So this is, if I am simplifying this, but this is insurance for insurance companies.
correct. Exactly.
That's the way I simplify things. They're actually going out and they're purchasing insurance from like Lloyd's of London or some of these bigger companies like that. And so they're backing up the insurance company because of these type of circumstances, exactly what you're talking about. You can handle it with your premiums probably 95% of the time. But in case of this major cat event, you're going to need reinsurance to kick in. So once it gets over 10 million or $50 million, it's the same as a homeowner, just on bigger scales, much bigger numbers. $50 million seems like a fascinating amount of money, but it's not really for the insurance industry. That's just a typical premium deductible that you're going to pay. It's essentially what it's acting like. It's a deductible. You're going to pay up to X, and then anything over that, the reinsurance kicks in.
Correct.
And so what you're saying is, you mentioned this briefly, is that in some markets, like in Florida, they're stepping out. The reinsurance industry is just saying, nope, we're gonna step away from this.
Wow. I was on a conference call, maybe a month or two ago, with some legislators and some lobbyists, and we were talking about the Florida market specifically and how the legislature, the departments of insurance, the private industry needs to get their arms around this, because if reinsurance is unavailable, and then companies are reluctant to write risky business. Like in Florida, for example, we get hurricanes every year. Not all of them hit land, but some insurance companies, most of them say, we're not going to insure anything within X amount of miles from the coast. Let's say 2 miles from the coast. There's a lot of homes on the coast in Florida, Michigan, and in California and everywhere. What happens is you have an insurer of last resort. And so like in Florida, that company is called Citizens Insurance Company. And if you can't get insurance in the regular market, then Citizens will write that business. It's not a full policy. It's a different policy, but they'll cover the catastrophic losses. But the premiums are huge. I think they have to be like 20% higher than the highest insurance company. Don't quote me on that, but that's how Citizens works. And so they're a state insurance company that the private industry said, we're just not going to write those big homes on the coast, primarily because of the hurricane risk, or we'll write that home, but we're going to exclude wind damage. And hurricanes are considered wind damage. They do bring a lot of water with them, but it's considered wind damage. So we'll write that policy, but we won't write the peril of wind. And so the customer either has to self-insure that or go to someone like Citizens and say, I just want you to write the wind peril on my house. And so now you're paying for a private
two insurance, right? You have your primary, and then you have another one. And in some cases, you might even have a third one because you need flood insurance as well, correct?
Exactly. So the National Insurance Flood Program comes in as well. Or deductibles. They'll charge a wind deductible, maybe 10% of your coverage limit or 20% of your coverage limit. So if you insure your home for $300,000 and you have a 20% deductible, you're self-insuring up to $6,000, and anything under $6,000, you're just paying out of your.
It'd be $60,000, correct?
$60,000. You're right. 10%. Yeah, you're right.
$60,000. That's a lot of money to people. You can't even wrap your mind around how much money that is. That's a lot of money for most people.
Sit the only way you can get insurance in some areas. You just don't have a choice. California, they've got an earthquake. The California Earthquake Authority is there to sit on top of the earthquake. And those deductibles are 5% or 10% or 20%. And so some of the homes in California might insure for $600,000 or $700,000, and then you have a 10% deductible. So you got a $70,000 deductible. If you just have little cracks in your home following an earthquake, you're never going to get north of $70,000. It's basically a catastrophic policy. If the earthquake or if the hurricane just wipes it out, you're going to end up paying that large deductible, but you're going to have someone to pay for the $300,000 or $400,000 or $500,000 it costs to rebuild a house.
Wow, that's okay. So this is in this whole changing of the industry, and whereas you're seeing them step away from these markets, and so what I would presume you're going to see as well is that you're forcing the homeowners to make a decision. Do you really want to live right there, a mile from the ocean? Okay, you're going to pay X. I would imagine that there's people that are going to have to decide, is this really for me? Can I really afford to be here? What you're going to, I would assume, you're going to see is hollowing out of those areas in the sense of only the wealthy will be able to afford to stay there. Because for everyone else, anyone else that's even like earning a normal income, just an average person that's earning a normal income, what you're going to see is that they cannot afford to sustain that. There's no way you can come out of pocket for 60 or more. It's probably more money depending on where you're at and how much your home is valued at. You may be even talking about $100,000 or more coming out of pocket for that much money. You just can't do that. You cannot sustain that. I know that what you said, Citizens, I know about Citizens as well. And they're in some areas, they're going up to double. They're increasing their premiums that much. It's going up insane amounts. And so if you're an average American that's working and earning a salary, and all of a sudden your premiums on your insurance, which you said you might have 2 or 3 insurance, goes up by 50% or whatever it is, it becomes unaffordable. You have to make a decision. Am I going to continue to live in Florida, or am I going to go inland to Georgia, Alabama, some other state that's I can afford to live? That's really interesting to think about as well. Todd, I'm sorry to waste or to take so much of your time.
No,
I
great.
really appreciate your insights, and I had a lot of fun. I learned a lot of things with this, and I hope that all my audience did as well. But now hopefully I can have you on again when you're working for Allstate or some other major company. You never know. Don't rule yourself out. You never know what might happen in the future. You might be moving on up to some bigger and better company in the near future. But I really enjoyed your time, and thank you so much for coming on our show.
Thank you, Caleb. It was a pleasant experience. So thank you so much.
All right. Thank you as well. Hi, this is Caleb Owens with Premier Insurance Housing. Do you need help with ALE or temporary housing for your policyholders or clients? If so, we would love to help out. We offer a wide range of services, and we offer our services nationwide. We offer mobile homes and fifth wheels to single-family homes and apartments. To request our services, just click the link in the description or give us a call, 405-604-0786. Thank you.